Charlie, coming back to you here now on the value front, how do the U.S. budget deficit and the bond market factor into your medium-term strategy, given what we see going on in Congress?
I would say short term, it's very hard to predict when these budget deficits are going to show up in a big way. But in the long run, what can't go on forever ends. And these kinds of deficits that we're running right now can't go on forever. Very hard to predict when it's going to end, but we are in unprecedented levels of debt right now. We are unprecedented levels of deficits. This is going to be inflationary. Deficits are by definition inflationary when the Fed starts to fund them by borrowing more or by printing press. It's going to be inflationary, and then tariffs are fundamentally inflationary. So again, very hard to call when, but long term, this is the real threat.
Tom, security stocks have been on a nice run in general, but as we see Okta sort of pulling in the full year revenue guidance here, even though the results themselves look pretty strong, Tom, that in also the context of Salesforce doing this attempted buy of Informatica, is this environment more bullish or is it not with the macro uncertainty?
Well, I mean, companies should understandably be cautious because, you know, the tariff drama is still in play. I think investors are ultimately going to give pass to companies that don't give guidance. I mean, I don't think Okta's sort of pulling guidance means actually there's a downturn coming. It's just, I don't know how anyone could actually say what they expect for the next 2 quarters. But that being said, I do think 2026 is shaping up to be pretty good. So I not only do I think it's a good M&A environment next year, but we'll have deregulation, we'll have some visibility on taxes. I think the tariff drama's behind us, and the Fed, who's been on hold, is probably going to be dovish next year. I mean, to me, all of that means PE should be going up, and I think the $7 trillion of cash on the sidelines starts to get deployed.
Okay. Charlie, we've still got rates higher for at least for now, probably for longer than a lot of people would like. And we've got a consumer that's overall getting pinched on the credit side. We'll see how overextended. Now, I know you like value, but value gets affected by those things. No? How should investors navigate that?
Yeah, a couple of thoughts there. One, it is true that higher interest rates actually have less effect on value than on growth because value stocks have a shorter duration. Their cash flows are coming sooner than growth companies whose cash flows are in the far distant. So higher interest rates, all else equal, have less effect on value stocks than on growth stocks, low PE versus high PE. But you're absolutely right. One of the real bear cases on value is the consumer. Today's news was very positive for the consumer confidence, but all of us who are talking to companies are still worried about the consumer. And I will admit that is more of a headwind for value stocks than for growth.
Tom, Bitcoin at around 110,000 right now, very high levels. And you think that that's bullish for growth and risk overall?
Yeah. I mean, Bitcoin for the past 10 years has been not only a leading indicator, but I think a risk-on indicator because it does respond to liquidity. So Bitcoin made an all-time high last week. Bitcoin peaked a month before the S&P did. So I do think this is telling us the S&P should be making all-time highs pretty soon. But it doesn't mean I think Bitcoin's capped as well. I mean, I think we have to keep in mind that institutional adoption for Bitcoin's growing. I think that consumer awareness for Bitcoin actually is still pretty nascent. And so when we still have a visible demand coming and a fixed supply, I think it's a lot of upside for Bitcoin.